Hey everybody, this is Matt at tradingparadigm.com, and today I want to discuss trading with market profile. Market profile is actually a trademarked term with the Chicago Board of Trade. So most trading platforms and charting packages that offer market profiling functionality actually call it something else, usually time price opportunity or TPO. But no matter the label, market profile or TPO, it's an extremely powerful tool. It's a unique charting method that displays time or opportunity at price and builds out a distribution curve to showcase that opportunity within a one-day time frame. Observing and analyzing market profile can take a little time to get used to for those unfamiliar with it, because it's quite different than the typical line, bar, or candlestick charts that almost everyone tends to use. But market profile provides far more robust auction information in a highly organized, aesthetically meaningful way. Just like volume profile, which I talk about a lot, market profile helps you see beyond surface level price data and uncover the quality of price. When you look at a standard daily bar or daily candlestick, for example, it's easy to see the open, high, low, and close. And that's great information to have, sure. But what you can't see is how much time was spent or opportunity was available at those prices. There's a lot of structure that market profile can display that's hidden beneath the surface of conventional bars and candlesticks. For some clarity, here's an image of a daily market profile graphic showcasing all of the individual TPOs on the right and the combined or collapsed distribution curve those TPOs create on the left. Depending on your specific charting software, the letters, colors, and time increments can often be adjusted in numerous ways. But a standard market profile chart breaks things down into 30-minute increments and assigns a letter to each 30-minute period. The first 30-minute period of the session, for example, is deemed A period. The second 30-minute period is B period, and so on. And during these 30-minute periods of time, like in A period, for example, new A's are printed vertically on the chart when price moves up and down to new highs or lows for that particular period. The letters or TPOs essentially display the range of opportunity for that given period, and that continues on for all 30-minute separate periods of the session. This all might sound confusing if you're new to it, but market profile is a great way to see where market participants are doing business. In other words, seeing which prices are being accepted and which are not. In discussing market profile, I think it's important to bring up volume profile as well, because in my opinion, the two go hand in hand. There are some traders who only use market profile, as well as traders who only use volume profile. But in my opinion, there's unique value offered by both, and they're most powerful when used in conjunction with one another. Now, I know I'm going to get the question, which one is better? So if I absolutely had to choose just one and couldn't use the other, I would personally choose volume profile, because volume, the actual transactions of shares or contracts, to me is a more meaningful indicator of price quality than time at price. But in saying that, that doesn't mean market profile isn't an extremely valuable and powerful tool. I personally think far more developing traders should be building a high degree of competence and skill around both of these tools. They allow you to deeply see and understand market movement and behavior in an extremely pure form, without diluting your analysis with all kinds of fairly arbitrary and oftentimes lagging indicators. When it comes to actually using these tools, I personally put a lot more weight on volume profile for analyzing the narrative and looking at medium and higher time frame context through the use of weekly, monthly, quarterly, and yearly composite volume profiles. And when it comes to market profile, I'm typically using that on a pretty short-term basis. I don't really look at composite market profiles, but I certainly keep market profile structure in mind from the past several sessions. Usually at least a couple weeks worth of intraday market profile data to help aid in making high-quality trade decisions. One of the biggest benefits of market profile is that it can be used to discern open and day types. How a session opens can be a meaningful clue in regard to how the rest of the session will likely transpire. And of course, the structure of previous sessions can dictate what happens in the current session. So being able to clearly analyze this context can help not necessarily predict, but anticipate likely scenarios that might play out and position favorably for when they do. Overall, markets are two-way auctions between buyers and sellers. And in my opinion, volume and market profile are the absolute best tools for organizing, analyzing, and ultimately executing on market behavior. I often reference the depth required to be a consistently profitable and sustainable trader, and there are two forms of that depth. Depth from a self-awareness and mindset perspective, and depth from a market structure, behavior, and mathematical edge perspective. Auction market theory and profiling tools offer far more depth from a methodology perspective than anything else I've ever come across. Of course, it's not the only way to trade. Other tools can suffice. But in my experience, using other tools and indicators without any form of profiling at all is kind of like choosing to view markets in 1D or 2D at best when 3D is available. The level of depth in regard to market structure, posture, character, movement, and behavior that profiling tools depict is significant. You can find the link to this full article along with several other related ones down in the description. And if you have any thoughts, opinions, or questions on the topic, please share in the comments, and I'll talk to you in the next video. Take care.